Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar maintains its bullish bias since posting a dragonfly doji. 3 consecutive bullish days have come into play, and now as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, retreats from its 5-month peak, now settles at 105.68. Speculations arise from the US data suggesting that the Federal Reserve might consider rate cuts earlier, shifting from September to August, with even some talks of possibly seeing a cut in June. Presently, Fed policymakers are in the media blackout before their May 1st policy meeting. In overnight, softer US PMI data reveals a slight contraction in manufacturing activities to 49.9, down from March's 51.9. Meanwhile, Australia's Consumer Price Index, the CPI inflation, exceeded expectations in Q1 2024, remaining above the Reserve Bank of Australia's target range. Year on year, the CPI rose by 3.6%, surpassing the anticipated 3.4%, driven by housing, food and healthcare costs. Despite easing from the 30-year highs in 2023, inflation remains well above the RBA's 2 to 3% target. Later in the week, the US is set to release its first quarter GDP data on Thursday, and the core personal consumption expenditure, the PCE price index, on Friday, which is expected to hold steady at 2.6%. Turning our view on the technical pattern, you can see the market is somewhat bullish as the RSI surges through the midway point at 50, and along with that now challenges the 60-day simple moving average around 65.35 to 50. If we do see a break above there, and the close of New York tomorrow would confirm further gains and look towards 66 to 67 cents. Any pullback is likely to be shallow, with support on the day seen at 64.45. With the dollar weakening, the euro has also maintained its bullish bias and continues to build on renewed optimism, given the fact that the US data from overnight could give further speculations about an early rate cut by the Federal Reserve. Still, there is still much work to do to the upside, and the clearance of 107.1015, which is where we are now challenging, could see further guidance towards 107.1890 and on to 108.60. With any pullback, I feel will be shallow and therefore look for support around 106.65. The Japanese yen maintains a sideways pattern for 7 consecutive days, and still no clear sign of any intervention from the Bank of Japan. Despite the US data releases this week, Friday brings Tokyo Consumer Price Index, the CPI inflation data, which is expected to hold steady around 2.6%, and the Bank of Japan's interest rate decision and outlook report for the first quarter are also anticipated. Given the fact that there is potential high volatility, little view is seen to the top side. However, declining indicators, mainly the RSI and the MACD also marrying up nearly to a negative bias, could see a significant downturn and see a move back towards that level that was rejected last week at 153.70.75. If we do see a break there, it does give further scope to the downside and bringing a target of 152.5, and with an objective or trajectory which is seen at 150.50.60. Having rejected the bottom side challenge at 123.25.35, sterling stages a very strong candle overnight and now in a prime position to rally on, and that is on towards 124.80.90, and a clearance there would reset the market back towards the top side target around 126 to 128. I feel given the recent bearish bias, the bulls are back and likely to continue to navigate higher, but you do need to see a break of 124.80.90 to support this call. Given the last 2 days of volatility, spot gold is a little bit mixed as it now challenges this current uptrend, which displayed a break briefly but now hovers around the line. Given the fact that the technicals are still heavy, it is seen that the market may lead on lower, that is on towards 2,300, and with the objective seen from the break, the measured move to 2,250.70 and reassess from there. Any upside attempts should fail anywhere from 2,325 to around 2,333 to 37. Wrapping up with oil, well, we've got a bit of a bounce coming through here, close towards that bottom side, around $80 a barrel. And still looks a little bit to the hesitant side to continue. If that's the case, then I feel the resistance around 84, 20, 40 should hold and eventually see a turn back to the downside and coming in around the lows seen at 79, 80, 90. Well, that's a wrap. Thank you for joining me. And as always, look out the interest report and I hope you enjoyed a great start to the day.